Do you suck at trading? Are you struggling to become profitable in the stock market, or trading Forex, or trading futures, or trading communities? Is this something that has bothered you and you just can't seem to find a solution to it? Well, I've got the solution for you. I've been doing this for 30 years, and there's certain things and certain mistakes that I've made over the years, and I found the way years ago of becoming profitable and actually learning how to make money in the stock market, how to make real money in the stock market, how to stop losing on a regular basis, because that's what most of you are doing, losing, because trading is risky. 80% of traders do lose money, and if you don't like losing money and you don't like risk, you probably shouldn't be trading, because that's the basis of trading. Trading is not an easy game. People think that you can get into trading and overnight you're going to be this huge success, that you're going to take $100 or $1,000 and turn it into $1 million in a week. And it's the mentality behind that is, it's like thinking I'm going to become a doctor in a week. You can't. I don't know anybody who can, and you're going to have to be extremely lucky to do so. So those who do get into trading and they suddenly make a fortune in their first week generally lose it because they never really learned anything. And that's the difficulty behind it, because I always tell people that trading is a 50-50 game. There's no such thing as a system that's going to make you rich, or a system that's going to make you easy money in the stock market, because you have to understand that the market is made up for you, and it consists of buyers and it consists of sellers, and both believe that they have the edge and both believe they're going to be profitable in the stock market. And the other things that I have to tell you is, if you take two people and you give them exactly the same system to trade, it doesn't matter who's trading it. One will win and one will lose, because it's all in the mind and it's all in the psychology of trading. It's all in the strategy, not in the system. Charts will not make you rich. Fundamentals will not make you rich. The way you approach your trading will make you rich and make you profitable, because it's all about how you approach it, not how you trade it. We're going to get to that, and we're going to talk about it after we've looked at the charts. We'll also talk about the free gift I got for you in the description, and we'll also talk about the trade of the day every day that's available to you as well. But first, let's go and have a look at the charts. Let's go and talk about a simple system that can help you to become profitable. Now, understand me when I tell you this. The system that I'm going to show you is simple, and it's there so that you can be strategic, and so that you can learn to manage your loss, so that you can learn to manage your trades, and so that you can learn to approach your trading correctly. But I'm going to show you how to do that after we've looked at the charts. But first, let's look at the charts, then you understand that, and then I can talk to you about how we approach it. So you need that simple solution to boost your trading skills, and here it is, guys. It's pretty simple. So let's just use this one as a good example. I'm using it because it's here. It's on my screen and it looks good. What we do, always go to the day chart, and then on the day chart, well, first we go to the line chart, then we go to the day chart, we go to the day chart, we put it on a line chart, right? So now you've got your day chart here, and it just looks like a squiggly line. But what you have on your day chart is all the closing prices. You see here, these are all the closing prices, and that is a resistance. So we take our drawing tool, we draw our resistance in at the top here. So now we know where the price likes to hang out. It gets stuck here when it goes back up. If it breaks through that, that's a sign that it's going to continue on long. But that's what's holding it up at the moment, is that nasty resistance. Where's the support on this particular product? Well, you've got support at this level right here, where she likes to hang out as well. And then you've got another support down at the bottom here. I would say this one's more relevant because it is a little bit closer. So we'll draw some support in here. There's some support. Oops, what have I done? I've knocked it away. Let's just draw it back in again. So there's some support. Sometimes these lines like to give you a little bit of trouble. And then of course there's another support down here, but you don't need to draw that one in. It's not really that necessary. Okay, then what you do is you put it back to the candle chart, and you see how that looks, and then you go back to your 4-hour chart. Now what are you seeing here? You see this is bearish, so you know that it's in a bearish trend at the moment. So whatever lower time frame you're trading on, you know that the Nikkei is in a bearish trend. Now what you do is you look at this and you say, well, where do we stand with the Nikkei at the moment. I'm looking at my trend and I'm seeing a bearish trend resistance in there. So now this is how you trade. Now what you do is you look at, okay, I can take a short from that level down to there, or I can wait for that level and take my short from there down to there because it's in a bearish trend, or I can hope that it breaks through this level, goes all the way down to the bottom here, and then continues on down with a retest down to the next level. So this is how you look for trades with the trend. So now you're looking for a trade with the actual trend. This is just simplistic trading because you know on the day chart that this is in a bearish trend. So you're looking for bearish trades. The other thing you can do in trading is you can look at a long run like this. This is a long run. And you can say when it gets to the top here, there's a top there, there's a resistance. So you've got resistance at the top here and you say, well, I know that this is heavily overbought and I'm just going to look for a counter trend trade. So you can look for trades that counter the trend as well. Just bearing in mind that that is risky. But the best way to look for a counter trend trade is you normally have structure, wait for the down price to break that structure, that last structure, and start heading down. And then you can get into a short there and follow it down because it's effectively broken that structure. You see this one's got structure here. There's a resistance. Breaks through that structure, then it's probably going to go long because it's broken your bearish structure. A good example of breaking a level is gold. This week, gold did a fine job last week of breaking through this resistance. This resistance was here for a long time. This resistance was picked off the day level and it hit 1, 2, 3, 4, 5, 6, 7, 8 times before it broke through. And I told everyone if it breaks through this resistance, it's gone. The other thing to take note of when you look at gold, if you take this to the day chart, it might be more obvious and more give you some more clarity on it. But if you look at gold, it went up in structure and gave a flag pattern. This is a flag pattern here. So that little flag pattern normally goes to the upside. It normally resolves to the upside. So that's normally the case with a flag pattern on any trade when you've got a long uptrend. So now you go back and you're in your 4 hour and you're thinking to yourself, but that looks so big, that range. Yes, that is the case, but look at that. It came all the way up, straight up. It went along in a straight line. That's a good flag pattern and it resolved to the upside. It broke through. Once it breaks through, all that money's waiting and it just goes. It pushes that up. That means there was a lot of money waiting just beyond that level to buy it long. It's taken it straight up and that's actually brilliant. What you can do now is wait for it to do a retest and then go back up again. But it probably won't make it all the way down to the bottom here. Probably come down to this mid-level somewhere around here and retest and go up. So you'll get some structure following it further north. What I was saying, the third way to trade is to trade within the range. And then this is a range here. You see you've got this little range running across the top of these levels here and a little range running across the bottom of these levels here in the flag. And you can trade within the flag while it's trading within the flag. But caution is advised that you know it's a flag and it's going to break long. So rather be taking long trades. So in other words, wait for it to come down here, take a long trade up, wait for it to come down here, take a long trade up, wait for it to come down here, take a long trade up. And then you get the best of both worlds because if it does break through, bonus, you're in the trade. This particular trade, I was in somewhere around the 25 level, 24.95 and waited, it broke through and it's fantastic. It's good news. You see, when you go into profit as well, simplistic trading guys, when you go into profit, don't get excited and take the profit because fear does that to you. It makes you take your profit far too early. What you do is you take your stop loss, which was down here, you move it up to cost and then you move it up into profit. And in this case, you move it up quite close because you've got quite a lot of profit and you're dying to take the profit off the table, but don't. Just move your stop loss quite far up. That way, when it does come back and test, it'll just take your stop loss out. You'll make a profit. You can wait for your next entry when it gets down a little bit lower. So you've looked at the charts and now you've seen how to go about it on the charts. And most of you will go to the charts and look at the system and say, well, that's how I'm going to make my money. But actually not. You see, the system I'm giving you can easily win you 8 trades out of 10. It could easily lose you 8 trades out of 10. Any system on the market that exists at the moment is not bulletproof. In fact, you can take someone's most fancy system, the best system that you believe was ever invented and was given to you on some course that you paid, I don't know, $1 million for. And you did this whole course and you spent a couple of weeks, not a couple of years like you would as a doctor or lawyer, a couple of weeks, and you learned this and now you're an expert at trading and you're going to take that system and now you're going to become profitable or you're going to become become rich. You can take that system. Now here's a challenge. You can take that system and trade it against a person who knows nothing about the stock market, a person who's never traded in the stock market in their life. Sit them next to you. Sit them right next to you. Let them make their own decisions on trades, and you make your decisions based on your fancy $1 million system that you paid for. At the end, I can almost guarantee you that there won't be much difference between your success and their success if you have the same mentality in the stock market or in trading Forex or futures or whatever it is. And that's what I'm trying to get over to people with my 50-50 principle. When you take a trade in the market, whether you've got a system or whether you don't got a system, you have a 50% chance of winning. You have a 50% chance of losing. If I flip a coin 10 times, you'll agree with me that 5 times it will land on heads, 5 times it will probably land on tails. In all probability, it won't be exact every time, but in all probability. The point is, you only want to lose 1 coin on the losses. If it lands on heads, say it's a loss, then you want to lose 1 coin 5 times. And if it lands on tails, it's a win. You want to win 2 coins on those wins or more. That's the strategy, guys. It's as simple as it gets. The reason I show you a simple system to trade with is that system allows you to manage that risk. It allows you to understand where your loss is going to be. And the strategy is simple. When you get into your trades, now you say, this week I'm going to take trades. I might take 1 trade. I might take 10 trades. I might take 20 trades. We don't know how the week's going to go. We get those weeks when we have slow weeks. We get those weeks when we have good, volatile, quick weeks where we can actually make money trading. But the simple solution is decide upfront how much risk you want to take on every single trade. Now, I don't know what your risk factor is or what you're comfortable with, but what I always tell everyone around me is when you're trading, make sure that you trade within your means. In other words, whatever risk you take, make sure you're comfortable with losing that money. And if you do lose that money, that you'll be able to sleep tonight, you'll still be able to feed your family, and you won't be bankrupt as a result of that loss that you took. What you got to do. Now, let's say I'm going to use the example of $200 because I like to use that example because I took that funded trader challenge for you guys so that we could see if we can be successful in a funded trader challenge, and if that's something that would work. It's the first time I've done it ever in my career. In the 30 years that I've been trading, I never even thought about getting funded or anything to that effect. It's absolutely amazing that one can. But there's a lot of controversy around these, and there's a lot of guys that said to me, yeah, but I'm going to struggle with your system with funded trading. So I took this funded trader challenge on, not only to prove to you that you can use this system with funded trader challenges, but also to see for myself whether it is a problem or not. Is it something we can do? Are there problems with funded trader challenges? Are there rules that affect us? But I took one on that doesn't bind me to the way I trade and also allows me to hold my trades overnight. If you guys do like that sort of thing, the link is in the description below. You can go and have a look at it for yourself. But the point of trading is to take your risk and decide how much risk you got. And it was because of that challenge that I got into this $200 thing, because you're only allowed to lose a certain amount of money per day. And I took a $25,000 challenge, and that only allows me to lose $1,000 a day, which limits my trading quite a bit. So yeah, that's something I learned from it. So when I'm teaching or showing you guys how to trade, I understand that a little bit better now, because when you just have your own account, you can just throw money at it, and you get to a point in your career where you're not really worried about, because there's enough balance to cover it. You see, when there isn't enough balance to cover it, that's when it makes all the difference. So $200, you say that's your risk. But now the point here is not to take a trade on the US 500 today on $200, and tomorrow on the Euro US dollar on $200, and tomorrow on gold on $500, because you think gold's going to go better. So we'll risk more. We'll risk $500. Don't do that. Make them all the same. Every single trade costs you $200. Now get your mentality right and think for yourself, do you know what? I'm taking this trade on, let's say it's the US 500, and it's going to cost me $200. That's it. You've written it off before you start. That's $200 that I'm paying for this trade. That's my stop loss. But I know that if I win, I'm going for $400 or more. So now your trade starts running and it goes $200 into profit. And let's say that's 50 points. I don't know. And you look at it and think, are you now going to leave $100, 100 point stop loss behind it? Because now you $200 in profit, you $200 in arrears. That's a $400 loss. Don't jump in with the fear, because the fear says take the profit and run. Don't do that. Don't take the profit. Be slow to take your profits. It's a little saying we've got in trading. Be slow to take your profits. What you do now is you move your stop loss up up the 50 points. Now you're at break even. You've actually gained $200 because now your trade is for free. You're no longer paying $200 for this trade. If it goes against you, the trade's totally free. You've lost nothing. This is what you don't get. You've lost nothing now. And if it goes further $200 in, lift the stop loss more. So you're $200 up and you're $200 in profit. And then you just keep on following your stop loss up so that you're in profit. Don't take the profit. Let the profits run. Let them run as long as possible. And if the trade goes into a position where you say, if I looked at that trade right now, I'd actually take a long trade, then add to the trade or double the trade at that point. But you don't have to start with that if you're a beginner. Just do yourself a favor and follow the stop losses up and trade that way. This way, you will start to become profitable on all your trades. You'll start to make money with all your trades. Hopefully that helps you. I don't know. But the free gift, guys, the free gift, go down to the description and get your free Forex book. It's all about trends. Like I said to you, there's the 3 basic ways of trading, and trends is one of them. You tend to follow trends. You can make money in the stock market if you follow trends. So get that PDF totally free. I'm not asking you anything for it. I also put out a trade of the day on my secret blog every day. It's just an idea. It's not trading advice. It's there for you. If you want to go and see what I'm doing, then you can see if it sort of aligns with what you're doing and how your research is working out and that sort of thing. For the members who join the YouTube membership, I actually put a video out every day and I put the list of trades and what trades are out there and which way I think they're going to go. And if you're interested in that sort of thing, then you'll have to basically join the membership with the trade of the day and up. So with that, guys, don't forget to come back and watch the live show tomorrow. We're going live again. Tomorrow will be the Euro session, and then we can all get together and as a community and we can talk about the markets and where we think they're going and whether it's going up or down. And also what we do on the live is we get the funded trader challenge out of the cabinet and we bring it up and we actually play around with the funded trader challenge as well. I must get my head around having that because I tend not to open it and then I forget to trade on it, and and then it comes to live trading twice a week and I'm like, I haven't traded on the damn thing. So I must get myself working on that, but not to worry, guys. See you tomorrow for the live show, hopefully, and then we can talk a little bit further about these things that we've discussed now. The 50-50, guys, if you don't agree with me on that, it's going to be very difficult for me to explain it to you in the comments. So I will keep going over it in the videos as much as possible, and also go back on the old videos and you'll see lots of times where I've tried to re-describe the 50-50 principle over and over again, because some guys actually write to me in the comments and say they disagree with the 50-50 principle, but I can't sit and try and describe it to you in a comment section because, as you can see, it's quite a difficult thing to get across even in video process. So just bear that in mind. I don't mind if you do comment about it, but everybody's got a point of view, obviously, but I won't be able to give you a proper answer in the comments. I will give it to you in the videos if you don't mind. So guys, thanks for watching. Don't forget to come back for the live show. Don't forget to watch the last videos. Till next time, guys, thanks for watching. Cheers, thanks, and bye.